SMF MMTs, we've been all over this Amazon. We are finally going to give you the full earnings conference call of what's driving those revenues down. We've given a couple of other updates on it. We are short again down here. Short one, shorted twice. Wayne got short right up at the top. And he's a brand new MMT. Isn't that right, Wayne? And you did it, didn't you?
Yeah.
Did you enjoy it?
Yeah. I mean, I did get shaken out, but
that's okay. You got short with the profit. You know, you're brand new in after hours. The point of it is you got several different entries and moves. We have a little bit of echoing going there. So, Mr. Schubeck, can you read the earnings report? And can someone meet? There you go. Go ahead.
All right, Amazon. Earlier, we reported 44 cents. May not be comparable as well as we wanted to check to make sure our numbers were correct. While Amazon did post a 9-cent miss back in Q2 10, the size was simply surprising. But similar to what we saw in Google a few weeks ago, Amazon is pushing ahead aggressively with its growth plans, and that means spending aggressively. Spending is simply outpacing revenue growth, and the company has not been able to make up the difference with increased pricing. But unlike Google, people do not seem to care as the stock has rebounded and recovered all its losses and now up in after-hours trade.
Except
currently
it's reversed.
$79, yeah. If you're curious, when it had the 9-cent miss back in July, shares fell from 120 all the way to 105, but recovered most of their losses to close at 118.87. The stock then consolidated in the 115 to 120 area the following 2 weeks before breaking out and enjoying the current rally, which has pushed shares to the 180 area. Total operating expenses rose 41.5% year-to-year, outpacing the 38% revenue growth. Fulfillment up 56% year-to-year, marketing up 62%, and tech and content up 58% year-to-year, all outpaced revenue growth. Operating cash flow increased 9% to $3.03 billion for the trailing 12 months compared to $2.78 billion for the trailing 12 months ended March 31st, 2010. Free cash flow decreased 18% to $1.9 billion for the trailing 12 months compared with $2.3 billion for the trailing 12 months ended March 31st, 2010.
Well, having heard that, unlike Google was punished, but see, Google's revenues, they were making money to cover it, where this company is not. And that's what I'm hearing in the report. And the after-hours volatility about all of it is that the stock should be punished for it. It needs to spend a lot of money. But unlike Google, Google made a lot more profit revenues for hiring, CapEx spending, development, and everything else. So why Google was ever tortured for it, for making so much money versus this one here, they're having a problem. They're going to have to write down the quarter. As a matter of fact, back in 2010, we have a live video. We were short that time. And today's price action has been exactly exuberant, because one thing about doing a conference call with SMF, we know what we're doing when we do the conference calls. We train our MMTs, just as you heard MMT Scotty, who's been here learning about the earnings and learning how to trade these moves. These are all great directional moves based on the public reaction here. Both the long side, short side, pull back, short, right there. We just read the conference call, Amazon.com, full meal deal, MMTs. Going to be a great trader tomorrow off the bottoms and selling short off the top, just like it is today in after hours. All the live entries. And Wayne got short up there. MMT Doug did well. Sky, rockets in flight. Short me for an afternoon delight.